If I had one message to young people today, and that is, forget about AI, use RI, real intelligence. Think deeply and think beyond just the obvious of what you see. There's always something behind it. As Charlie Munger says, show me the incentive and I'll show you the outcome. And so, think deeply, think beyond. It's important that I express my personal opinion. This isn't anything reflecting to my relationship with CFA or other things, but and people within CFA know my opinion on it. And I always put one word before it, and I call it bullshit ESG. And I call it that because very rarely could anybody ever remember the words that were spoken, but they can remember the energy that was transmitted. And if you can do that, you're going to win. My opinion that I've just expressed isn't going to win you the CFA Research Challenge. You're going to have to play the ESG game. It's a bit of a game because everybody knows that behind the scenes, it's just kind of a mess. But they're all playing the game, and students have to play that game. When you're asked a question by a judge, as much as you can, walk towards that judge and focus directly on that judge and think of them as a friend who's trying to understand this, and somebody that has your interests at heart. Judges when we talk as judges, our objective is to pick the team that we think can beat the teams in the next round. To answer the question about luck, think about it like a triangle. A CFA Research Challenge is like a triangle. You got...
Ladies and gentlemen, today we are kicking things off with the incredible Dr. Andrew Stotz. Before we start, I'd like to give a quick introduction. Andrew is an entrepreneur, educator, former equity research analyst. He has spent 20 years as an equity research analyst at major investment banks, officially retiring from this chapter in 2013. But this never really slowed him down. He has also served as the president of CFA Society Thailand and has been a dedicated CFA Research Challenge judge since 2009. He is the founder of the Valuation Masterclass, where Andrew is helping shape the next generation of financial analysts. Andrew is also the founder of the Profit Bootcamp, where he is helping mid-sized family businesses double profit in 12 months. Apart from that, Andrew is also the host of My Worst Investment Ever podcast, where he has interviewed more than 800 guests today, and he is on a mission to help 1 million people reduce risks in their life. Beyond finance, Andrew is also running a thriving coffee roasting business in Thailand, where he is supplying premium coffee across Thailand. So, an educator, a valuation expert, an equity research analyst, an entrepreneur, and with a career that is actually older than my age, I'm just 22 years old. Andrew, tell me, how are you feeling today?
Well, thanks for having me. I'm great. I just finished up a lot of my work for the day, and the rest of the day is meetings. So I schedule my time to do all my hard work between about 5 a.m. and let's say noon to right now it's 2 p.m. I just finished. So I'm ready to talk with you.
Thank you very much. Once again, it's an absolute honor to be having you on the show today. And thank you for taking out the time that you did and for everything you do for the CFA community. I have a bunch of questions. And before that, before I kick off this conversation, I also want to tell you that I was just reading some quotes. I came across a quote from a French-American novelist, and she says that we don't see things as they are, we see them as we are. Now, this really resonated with me because since you have done a lot, you run a coffee business, you run a podcast, you have been an equity research analyst, maybe a lot of my audience will not see things as they are, but they would see as they are because they are mostly upcoming CFA Research Challenge participants. So they are most interested in your experience as the judge during this challenge. So they're like, oh, he runs a coffee business, that's cool. But he has been the judge and he can give me advice, so that's most important to me. So everyone will see you from that lens. So maybe the first question, Andrew. I also participated in the challenge in 2025 this year, and we were part of the winning team. And we noticed this, and I want to ask you, is issuing a buy recommendation in the CFA Research Challenge a safer option for the teams? because in the last 18 years, only 2 out of these 18 years were a sell recommendation. So is this an inherent bias in the CFA Research Challenge that teams tend to issue a buy?
So before I answer that, let's talk about your quote. I often tell my students that I think what set me apart as an analyst was that I had the ability to put myself in the shoes of my listeners. And that is the concept of empathy and trying to understand the listeners. So I always tell people, for instance, when they're in a competition, think of the judges as your friends, and they're there trying to learn. And so you're trying to help them. So that's one of the key things. I think a lot of young people just get up in front of people and they start talking and they're not reading the audience and all that. So that's something I just would mention. But is there a bias? I would say the way to look at that is to look at the trillions of dollars that are being managed by fund managers around the world. And you can see that probably 90% of them are long only. They're not shorting, and they're buying stocks for the long run. Now some of them may say long and they trade short, but it's very common that in the world, particularly in the professional world of being an analyst, a broker, fund manager, that we prefer buy recommendations because that's something we can get into. I have a story. When I was a head of research, I took one of my analysts to Boston, and we met with a lot of different fund managers. And my analyst was very smart, and he had a very good sell recommendation on a particular company from Thailand. But after his first presentation, I said, look, when you present to the next person, you need to ask him, do you own this stock? And if the person says no, then say, can you short? And if the person says no, then go to your next story. Because, there's a bias. So there is a natural bias in the world of investing that is naturally there because of that. I would also add that I don't think it's the recommendation that ends up winning it. It's the power, the energy, the comprehensiveness, the ability to answer questions and things like that. So I wouldn't get too caught up on buy versus sell. Have a strong opinion and support it with great evidence and have a story to tell. And, you can win with a sell and you can win with a buy.
Awesome, great. This is interesting that you also say that there is this general bias, but it's not really a bias because of buy, but many other reasons. Yeah, the long short thing and other reasons. I will tell you my story because I also wanted to have like a POV of a former judge and a POV of what we went through when we were doing this competition. And we actually got this advice, surprisingly or not surprisingly, that if you're going for the challenge, we were valuing a company that was a real estate developer, by the way. And I'm based in Poland, not originally from here, but based here. And one of our, let's say, faculty mentors came to us and say, guys, you're doing great. You need to decide before you start the valuation even, if possible, whether you want to issue a buy or a sell, because this will make your work a lot easier. And we were perplexed because we were like, how is it even possible that I don't download the financials? I haven't reviewed the company and I decide on the rating. But what we did was went on some websites of brokerages and saw what the company is having the recommendation right now, and 100% recommendation was a buy. So at least it helped a little bit to understand that, okay, all the equity research analysts in the world are issuing a buy, so it might be a buy. So we approached the valuation from that perspective. So maybe we were already having an initial bias in our valuation. Great. Maybe the second question. And I also like the part where you say that the recommendation is not going to win the challenge, but rather the Q&A and other things. So maybe I will jump straight to this question. And that is, how much does your question and answer performance lead into the overall score for a team? Let's say you do a great Q&A. Will that lift your average presentation? Or let's say you do an average Q&A. Will that affect your great presentation?
Well, you've presented two things. Let's first deal with the advice that you got from your mentor. This is not good advice, I would argue. And the reason why is because the whole purpose of research is to do the research and then come to a conclusion. If you start from a conclusion, then you're not really doing research. You're doing what we would call validation. And validation has its points. There's sometimes that's valuable, but under CFA Code of Ethics, we are obliged to be independent and objective. And that basically helps us to understand that we need to look at things objectively, not just because other people are saying it. When I was an analyst, I started in 1993, and we didn't have access to other analyst reports, and we didn't have access to consensus and all that. And then I made a habit over my years as an analyst to never look at reports by anybody else, because I felt like it would cloud my judgment, and it would pull me in a particular direction. Nowadays, you kind of have to deal with it. In the Valuation Masterclass Bootcamp, I help the students look at consensus, but I just help them look at it and think that's where you're not going to win, is at consensus, because ultimately success as an analyst comes down to being different from consensus and being right. And both of those are hard. So that's the first point I would make about the advice that you got. Our objective is to do research and then come to a conclusion. And that's hard enough, already, without it being biased in the beginning. And the second thing you were asking about was Q&A. And I definitely think that most teams live and die on Q&A. I would say by the time you get up to the highest levels of the competition, and I just want to highlight, I'm speaking as an individual. I'm not a representative of CFA in any way, but I would say at the highest levels of any competition, it's really tough. I would actually say that there's a lot driven by luck. I remember being a judge in a particular competition, not CFA, and they were presenting about this shipping industry, and they didn't realize that one of the judge is an owner and manager of one of the largest shipping companies in the country they were presenting in. And then all of a sudden, they just got destroyed. And it was just the luck of the draw. And of course, they didn't do their research to know who was on the panel very well. And so that's something. But I would just say that it's probably also the place where presentations fail and mess up a lot, because I always tell students to, when you shift, I always say, whose session is Q&A? If the presentation session is yours, whose session is Q&A? And the natural reaction is, that's the judge's session. But I say that's wrong. It's still your session to dominate. And that means that you've got to answer the questions, and you can go back to your key points and reinforce those. But one of the little tricks that I teach my students, I don't advise any teams, because I prefer to be a judge. So I don't give any advice to any teams except general advice. And so I have a course on presenting and stuff like that. And in there I give advice. And that is, when you're asked a question by a judge, as much as you can, walk towards that judge and focus directly on that judge, and think of them as a friend who's trying to understand this, and somebody that has your interests at heart, and then work with them to try to get them to understand what, the answer to that question. So Q&A is critical.
Got it. This has always been our understanding as a team, and we wanted a judge to to second it. And now that you say that this is very critical, and a lot of your actual score and presentation would also depend on how you are performing here, it makes sense. And I think for upcoming CFA Research Challenge teams that are watching this video, you need to really prepare strongly, maybe anticipate questions, watch past videos to find out what questions have been asked. Because from our experience, a lot of times judges want to know very similar questions or topics about a company, because it's a new company. They want to understand what's really going to drive the price, whether it's a buy or a sell rating to your target price. A lot of times about your assumptions, and a lot of times just sense checking your assumptions. I will tell what we did, Andrew, and we watched past videos from the last, I don't know, 5, 10 years, and we built a question bank out of it. And there were about 300 questions in this. And we really noticed that this is a trend. Everyone likes to ask about how did you come at the terminal growth. Everyone likes to ask about what's going to happen if you go wrong. Everyone asks about what will happen for the price to reach your target. So I think we were very well prepared for this. Great. You talked about luck, and a lot of things depend on luck in the challenge, which is true. And There's a friend of mine. I've done some podcasts with him because he handled the industry analysis, and I wanted people to understand from his experience. And he talks a lot about it. He says we got lucky. There were teams that were the best in the world. Out of 1,000 teams, there were top five in Chicago. They were the best. So there is no way we were better than them. Maybe we just got lucky. And we always have this debate. No, we worked hard. He says, no, we got lucky. He says we worked hard, but luck favored us. And this is a great debate and can spend hours debating on this. But maybe, Andrew, I want to ask you about the subjectivity of CFA Research Challenge judges. Yes, everyone is judging from their perspective. So you could be first on a judge's rank sheet, but you could be ranked third or last on a judge's rank sheet, which is something you must accept. What do you think about this in CFA Research Challenge?
Well, I think that ultimately the judge, when I look at what I generally do is finalist judging in Thailand. And the question that the judges when we talk as judges, our objective is to pick the team that we think can beat the teams in the next round. And so, always, I think it's important in life, always step back and think about what's your objective here. And from my perspective, that's the objective. And so what's really critical when a judge is judging, and not all judges do this very well, is try to really differentiate between the teams. And it's hard, but they end up with really close scores. And then I've seen many times, behind the scenes at finalists, and we go into the meeting, the private meeting of the judges, they tally up the score and they say, okay, team D won according to your scores. And everybody's like, wait a minute, I didn't vote for team D. And then they realize that, they didn't differentiate enough in their scores. And so, I think judges get really close, and it's hard. I would say if you're a judge and you have 4 or 5 teams that are presenting, you're going to have 2 that may be kind of duds, not so great. But then you're going to have 2 or 3 that are really good. And those are the ones that, it's just really hard. And I think, to answer the question about luck, think about it like a triangle. A CFA Research Challenge is like a triangle. You got thousands of teams at the bottom, and they're moving up until it's narrowed down to the top teams. I think that luck plays very little role at the bottom of the triangle. Moving up just has to do with doing the right things, and many people will drop off. But once you get up to that highest level, it's very tough competition, and therefore I think luck plays a little bit more of a role. So those are some thoughts.
Yeah, that is super, super nice how you visualize it. Now it makes a lot of sense, and I would tend to agree to it. Yes. Okay, awesome. Andrew, a little bit of a digression, yeah, because you have spent 20 years officially, but I would say you are still active in equity research with the valuation masterclass and the training. So let's say 30 years in equity research. What do you think about the future of this profession in the age of AI? Yeah, you can. I have my thoughts. I want to hear your thoughts. Should people still aspire to be professional equity research analysts?
Well, for me, equity research analyst is a dream job, and I love it today just as much as I loved it when I first started in 1993. Financial analysts and equity research analysts are at the cutting edge of capitalism. The allocation of capital ultimately is the critical function of capitalism. And if capital's being directed in poorly performing investments, it's going to hurt the economy and hurt the markets. And so I think the function of a financial analyst is really important. Now, as far as the future of financial analysts, actually, AI is going to bring everybody to the average, because AI is naturally an accumulation of the average content on any particular topic. It's consensus. It's the ultimate consensus machine. It could be very wrong. I mean, AI can give a wrong answer, but as long as the world sees that wrong answer and repeats that, it's going to accumulate that information into the wrong answer that is eventually the truth is going to be changed in the future as a result of that, in my opinion. So I would argue that the value of a financial analyst is ultimately your ability to break from consensus. And I would say that consensus is becoming more concentrated and more focused. And there's even more need for people to step away. You know, a good example from my perspective is there's an absolute consensus over the financial world about ESG. And the consensus is very, very strong. And I have a very anti-consensus opinion about it. And I am happy to share that. And I have formed that by observing the behavior. So the more consensus, concentration into consensus, then the easier it is to be a successful analyst. So I'm pretty hopeful.
Awesome. That's positive to hear. And these three controversial letters, the three controversial alphabets, you know them, ESG. Let's talk about it because honestly, Andrew, I would love to hear your thoughts on this because I also might have a little bit of an antithetical view on ESG, and maybe we should discuss on it. So the floor is yours. Please tell me, what do you think about ESG in valuation? What would you say to the participants? Because now it carries 10 points. I don't know when you were judging the challenge whether ESG already came because it was already introduced in 2020 or 21 when BI Norwegian Business School won the global finals. That was the first year when ESG was introduced for 10 points. So what do you think? How to include in valuation and advice for the teams how to use it?
Well, it's very important that I express my personal opinion. This isn't anything reflecting to my relationship with CFA or other things, but and people within CFA know my opinion on it. And I always put one word before it, and I call it bullshit ESG. And I call it that because when you look behind the scenes, it's a house of cards. And I actually have a whole presentation, 23 reasons why I'm anti-ESG. And there's many, many powerful reasons. You can just start with the reason related to there is no objective measure of ESG and there's no, consensus of it, number one. And that's one that just makes it an impossible thing to pursue. The second thing is I believe that it undermines democracy. And where I believe that is that basically what's happening is that companies are being basically threatened by asset owners to behave in a certain way or else. And there's no recourse. There's very, very little recourse. And we've seen over the past 5 or 10 years, capital will be withdrawn from you, your industry, your company, if you don't play by their rules. And so one of the arguments I make is that, and I have a debate in my ethics class for CFA ethics at the university I teach at, and one of them is about ESG with my students arguing on both sides. And it's a fantastic, way of getting them to think about it. But basically, one of the things that, when I look at, for instance, let's just talk about pollution, because that's a big thing in Thailand, particularly now, because pollution mainly is driven by crop burning in Thailand. And so crop burning is illegal, but the government doesn't enforce the law on it. And so instead of solving the problem by putting pressure on government to solve that problem, what's happening is people are putting pressure on companies that really don't, they don't have the ability to, they don't have the mandate, a political mandate to do that. Now they can do their bit and, try, but they're not going to solve that problem. And so it misdirects where the effort should be. And it also means that, let's just say that the effort should be getting government to initiate a stronger air quality, requirement. The beauty of that is that also pushes that through the political process. And when it pushes it through the political process, it allows different constituents to argue their point. And I would argue that what's happening with ESG these days is that you can't do a counter argument or else you're just locked out. And so I have a lot to say on that topic, but basically, if I have one message to young people today, and that is, forget about AI, use RI. You know RI?
Tell me about it.
real intelligence. Think and think deeply and think beyond just the obvious of what you see. There's always something behind it. As Charlie Munger says, show me the incentive and I'll show you the outcome. And so, think deeply, think beyond. Now that my opinion that I've just expressed isn't going to win you the CFA Research Challenge. You're going to have to play the ESG game. It's a bit of a game because everybody knows that behind the scenes, it's just kind of a mess, but they're all playing the game. And, students have to play that game. But, and of course, I'm not against, having a beautiful society, and I'm not against having a beautiful environment. What I'm against is the way that it's being done.
Awesome. Very interesting, Andrew. I actually think this is very true what you have expressed. I will tell you my experience and our experience from ESG side. Our mentor was also not the biggest of supporter. Sorry, well, we had two mentors, industry mentor and faculty mentor. So one of them wasn't the biggest supporters of ESG and asked us to take a very pragmatic approach. You don't necessarily have to bring up a VAC discount or a VAC premium for ESG. How are you going to really quantify that? This is the most subjective things in valuation, rather. Maybe assumptions could somehow be quantified, but your discounts and premiums on any of the valuation metrics based on ESG are not quantifiable. We can say yes, the company hired. In our case, it was the company hiring the first female CFO. Now, how is it going to affect my cash flows if a female is sitting as the chair of the finance committee? I don't know. So this was the thing, and I agree that a lot of capital is being withdrawn, or democracy within companies, which is your shareholder votes are being hijacked by activist investors, activist ESG investors. Or there was this recent example 2 years or 3 years ago where ESG rating agencies gave a much lower rating to EV companies. So I think Tesla got a much lower rating than tobacco companies, which is Philip Morris. So this is obviously our opinions, no professional relationships. This is us discussing our personal opinions. So I agree also. So quite interesting. Thank you for the advice to the participant. Uh, when I
And
made the video,
also, just I'll make some advice related to the valuation of a company. The beautiful thing about valuation is that, and maybe when you're young, you hear the words that someone says, I don't like capitalists because they're all about maximizing profit. And I always tell my students that, that's wrong. The objective of capitalism is maximizing value, and value is a function of two factors. Number one, the profit or the cash flows, and the risk or the riskiness of those cash flows. So we don't need a lot of complex adjustments to ESG, to valuation based upon ESG, because it's already there. So if we take now, what a good example is, imagine a company is doing corruption and they're polluting and they're paying a government official and they're getting away with it. Nobody knows about it. That's kind of a hidden factor that we may not be able to figure out until it's either made public or we really, really dig to find it. So it's impossible for many of these hidden types of things to show up in our valuations. And once it's already made public, it's probably already in the valuation. The discount rate is going to be, much higher as the riskiness of the cash flows and the future is higher. Where this is where the ESG police come in, and that is the idea of how do we come up with a government mandated or accounting mandated penalty for people who don't play by our rules. And that's really this game that's happening right now of trying to say that we can value companies by making an adjustment for future suffering that you're going to get because the ESG police are going to come after you. And I think that is where we are at right now, particularly with accounting standards. And we're on the brink of that being put into place, which I think would be an absolute disaster. So, from that perspective, if I was a student competing in it, I would parrot the words that they need to hear, about ESG, this and that and whatever. But, I don't think that ESG is going to win you the competition, and I don't think it's going to lose you the competition. Focus on the story, focus on the risks, focus on the cash flow.
Awesome. Thank you for the advice. Next question is because we were also talking about valuation a bit. So maybe tell me the top valuation mistakes or red flags from the top of your head, which you see again and again, which instantly kill credibility for you, which the teams should watch out for in their valuation.
Well, I wrote a book called 9 Valuation Mistakes and How to Avoid Them. And
Actually, sorry, Andrew, can I cut you off for just a sec? I've seen
yep.
that book. I've seen the
Mm.
contents of that book. I haven't read it in full. And I have one of the chapters there which I would like to discuss, which is about estimating beta. So
Yep.
maybe once you give your answer about the top red flags of valuation, let's go to that.
Yeah, I mean, I think that the top red flag is over optimism in revenue forecasts. And I think that it also spreads to gross margin or profit forecasts. So just over optimism is what you see a lot. And so you have to be very careful, particularly because, as we've already talked about, there's a bias towards buy, there's a bias towards optimism. And many people, have trouble with that. And so in the Valuation Masterclass Bootcamp, I teach the students how to tie their story in with their numbers, because that really is what valuation is all about, is what's the story and how is that reflected in the numbers? Is that going to increase revenue by 3 percentage points, or is it going to be 0.3 percentage points? So it's that is what I would say. As far as beta is concerned, maybe you can ask your question and I'll answer that.
Sure. Yeah, I was actually just looking it up because I remember when I was looking at this book. By the way, guys, if you would like, you can totally check this book. I'll put the link in the description. I think you said something about calculating the beta of the company in some specific method. I don't know which method. Were you talking about calculating the beta using the regression method, or what was it about?
Well,
If you can explain
what I
this.
was saying is that there is simply no way to calculate the beta. There is no way to calculate the correct beta. And you could do it on a 3-year basis, on a 5-year basis, on a 90-day basis, and you're going to come up with very, very different betas. You could come up with some sort of adjustment type of calculation, but the whole point is, in valuation, the beta that you're using in the value is the future beta. And therefore, it's something that we cannot calculate. Now, generally, the CAPM, is not. It's a very narrow model, as opposed to, let's say, the Fama French model of many factors. So generally, I only use the CAPM model as a guide, but not as a strong tool. And the reason why is, what really matters is what's your discount rate. And that discount rate, ultimately, it doesn't matter. As I say, there's a good story that I tell in the book, and I also tell in my class, which is, Yogi Berra, a famous baseball player and funny guy, went to a pizza place and he asked them, how many sizes are your pizzas? They said they're all the same size. And he said, okay, I'll get one of those. And he paid for it. He went back, and as he was walking to his table, he turned around and he walked back and he said, how many slices is that pizza? And they said, well, it's 6 slices. And he said, oh, you better cut it in 4, because I'm not hungry enough to eat 6 slices. So the point is, beta is the slices of a pizza. The risk-free rate, the discount, the beta, the CAPM is the pizza, and beta, risk-free rate, equity risk premium are really unknowable factors. And so I tell my students, forget about those factors. Focus
What do you do
on,
then? Because let's say okay, so basically what you're saying is, okay, you can do any method, but that's not like the big picture. The big picture is rather other things, right? Because I mean, you need a beta at the end of the day to get to a discount rate. So I have a beta,
no, you
but you
don't.
say that
No, you don't. You don't need that. You can just pick a discount rate. The beta is just
Oh,
some, theoretical idea of
okay.
how that discount rate splits. Now, I can accept that in a competition or in a valuation, you're going to show the components, but I would never get caught up in a discussion on beta or any of that. I would basically go to the discount rate and say, my discount rate's 12%. And if we look at comparables and the like, it's, I think for these reasons, I think it's reasonable. And so I wouldn't get into a big debate on that. And the other thing
Gotcha.
that I do, and I did this as an analyst, as a head of research, because analysts are sneaky. They're always looking for ways to change their target prices and, get more upside or whatever. And one of the ways they do it is they change their forecasts, the revenue or the profit forecast. Another way they do it is they change their discount rate or they, change their beta or whatever. And so I basically told them, look, since we're in Thailand and we're valuing Thai companies, I'm going to set the risk-free rate that's the same for everybody. Every single analyst needs to use this rate, and that's, let's say, 4%. And then also, since we're in Thailand and we're valuing Thai companies, then I'm going to set the equity risk premium and say that it's another, let's just say 6% for equity risk premium, which gets us to 11% average market discount rate. Now, the only thing that you can change is the beta. And I showed the research that I did, and it's out there also, but I did it myself to try to understand it, to find that, high beta stocks, the beta of a company's stock will revert towards the average. And whether that's low or high. Now, it will tend to stay for many, maybe even a decade or two as high, but it's never going to stay extremely high and it's never going to stay extremely low. And so what I do is I tell my analysts to use a range. A high beta stock use 1.25 and a low beta stock use 0.75 and an average beta stock use 1.
Gotcha. When I was talking to some professional equity research analysts after the competition, I also found out that a lot of professional brokerage houses use like a standard beta of 1 for everything they're valuing, or even sometimes standard growth rate of 2% or like long-term GDP, and they just go with it. And I also know people who work in professional IB that they actually just choose a discount rate based on their understanding and their experience. And if they really want to show it in CAPM to the client, they would just work
Well, I mean,
backwards.
if you think about life in general, as I always tell my students, is that life is simple. And if life gets complicated, something's wrong. And valuation's no different. And if we look at your life as an example, your success is going to be a factor of only a small, we could come up with 50 different factors that could have an impact on your success. But really, it's going to come down to your health, which is going to determine the amount of energy you can bring to your working day. And it's going to come down to maybe the amount of study that you do to understand things. And it's going to come down to your years of experience. We bring those 3 things together. We do well on those 3 things. You're going to have a great life. And can we identify some other smaller things? Yes. The composition of your food and stuff like that. Yep. But generally, those are the 3 things. And so it's the same thing in valuation. And I think that's where young people get a little overwhelmed when they're valuing companies and doing the research challenge. You end up with this waterfall or fire hose of information and ideas and so many different measures. But truthfully, it really comes down to a very small number of major factors. And beta is not one of them.
Awesome. I would share also one thing, which we had as a source of guiding principle when we were doing the valuation. And this is an acronym called KISS, KISS, which is keep it super simple. So whenever we were debating a lot, spending hours deciding which chart should go in the deck, or what should be the script or story, or what should be really our calculation or assumptions for a specific thing within valuation, some guy was like, guys, KISS. And you know that you need to be very simple here and keep it simple. Don't overcomplicate, because end of the day, it's more about storytelling, more about really energizing the judges. I think we have spent 40 minutes talking, so let's slowly move to winding this up, Andrew.
Mm.
So I have made a video which is about how to win the CFA Research Challenge, and big kudos and thank you to you for the inspiration. The main reason why I wanted to do this conversation was when I was doing the CFA Research Challenge with my team, there was little accessibility to content that actually explain what really happens and what goes on in the minds of judges and participants, what you should do, what has been proven in the challenge. And your videos really help. There was a video that you posted that was just 2 minutes, and there was like your top tip to win the CFA Research Challenge. And I by the smile I can tell you know what it is, and it was to be energetic and to smile. Yes, so the one piece of advice you gave was smile to the team members. Tell me about
Mm.
it, and then tell me more about one thing teams should do, one thing they should not do.
Yeah, well, that one came from when I was in the team in 2012 from Thailand was in New York in the finals, and I was on the board, but I wasn't president at the time. But I happened to be in the U.S. meeting clients, so I went to the competition, which was at the Bloomberg offices, and the students were pretty nervous because they were facing 3 teams that were all master's degree students. And I talked to them and I just said, what's the strength of Thailand? Number 1, smile. Number 2, what's the strength of youth, right? You've got energy. Those guys are going to all stand up and say, oh, EBITDA and this EBIT margin and GP margin and the this and that. They have all the lingo, but you guys have the energy and the positive energy. So bounce on that stage, and they did, and they won. And that's when Thailand won the Global Research Challenge many years ago. So really, so if we go 5 years ahead from any presentation that someone gives, very rarely could anybody ever remember the words that were spoken, but they can remember the energy that was transmitted. And so every time that I speak and every time that my students speak, I try to get them to transmit their positive energy into the listener. And if you can do that, you're going to win. And now you may not always beat the competitor, but you're going to win. People are going to remember you. They're going to remember your energy, and they'll remember that for a lifetime. I mean, when I was 24, I studied with a man who was 92 years old, and his name was Dr. Deming. He was the father of the quality movement, and I saw his energy, and it just transferred into me. And for more than 35 years, let's say 30 years, 35 years, I've felt that energy and I've transmitted it just as he did to me. So energy is the key.
Awesome. What would your one advice be for the teams to start doing in your challenge? And what would be your one advice that they need to stop doing in the challenge?
Well, I think, first thing is I think the research challenge is too long. I think the written report is too long. And I think that CFA should cut it down because it's just way too much time spent on that. And also what I've graded the reports in the past, and I just couldn't do it after a while because they were all so much similar and they were all consensus. And so I think that, what we have to do less of as an analyst to be successful is we have to think different from consensus. And so, the stop thinking that success is covering every point, covering everything that the others cover. And the thing that I'd say, what's probably most important is storytelling. And when I teach, I have a course on presenting, and I have something I developed, I call it the peso format. And that is P, what's your point? And let's say this stock is cheap. E, what's your evidence? Well, it's trading on 10 times and the market's trading on 20. S, what's your story? I've waited for 3 years for this stock to get cheap. And O, what are the objections you're going to face, such as, oh, that stock's always cheap. How are you going to handle those objections? So ultimately, the S in peso is the critical thing to catch their emotion.
Awesome. the final question for today. I see a lot of books, and I see some books that I also have them here in my library, Atomic Habits and Influence. Great books have changed a lot of perspectives in my life. My favorite book actually is How to Win Friends and Influence People by Dale Carnegie. And I actually drew upon the advice from Dale, which is the sweetest sound for a person is their own name. So if I say Andrew, you will like it, and in general. So we try to actually use this psychological trick in our challenge when the judges ask us questions. We wanted to establish a personal connect with the judges. So we give like, hey, thank you, Andrew, for the question. I would like to explain to you further. And this was a trick which I think helped us. So the final question is, give us a book recommendation, not
So
scripted.
I've read about 3,000 books in my life, and I got a lot in my head on them, and I have a big library at home. But if I was to pick one, I would pick the book called Future Hype. And Future Hype is a book that debunks what is a common thing that people believe, which is that the world is moving at such a rapid pace. And he debunked it by actually showing that the pace of development has slowed down to an absolute crawl compared to the past. And I found that unbelievable as I approached the book. And as he explained his thinking, it really blew my mind. And so I think Future Hype is an incredible, interesting book, and it helps you think different.
Okay, thank you. With that said, on a positive light, and once again, thank you very much for this conversation, Andrew. I'm certain it will be a source of light for years to come for upcoming CFA Research Challenge participants. Thank you very much.
Most welcome.